Hi you guys, welcome back to the channel. So this year, 2020, we're not even halfway through the year. The stock market is acting like a 3-year-old having a tantrum. It's up, it's down, it's up, it's down, it's crazy, it's going off the rails. If we think back to the beginning of the year, right? People didn't want to invest because we were at all-time market highs. And I understand that. Then along comes February 19th, we hit the high at 3,386 in the S&P 500. And then it starts going down, and it meteored down, you guys, in a few weeks, right? Headlines like, worst day for the S&P since 1987. S&P down 11.5% this week. Worst day in the Dow ever. Some pretty bad headlines. Well, guess what? Now we're at the other end of the thing. So after we saw that meteoric drop, you guys, after that meteoric drop, now we've had, quote, the greatest 50-day rally in the history of the S&P 500. So we went from the worst drop to the biggest 50-day rally in under 6 months. So what does this mean for us as investors? That's the question, right? What's the stock market going to do? First of all, I'm not going to pretend to know. Nobody knows. The stock market does whatever it does, period. All right, but if we look at history, and history can teach us some things, looking at other 50-day rallies like this, 100% of the time, the stock market was up at 6 months and it was up at 12 months. The 6 month average was 10.2% up and the 1 year was 17.3. Now, last year, you guys know, we were in double digits for the year 2019. Can we keep going up? I don't know. If we take a look at this chart, we see that the last biggest 50-day rally was back in 1982, where it went up 35.6%. And at 6 months, they were up 15.6%. And at 12 months, they were up 20.3%. Now, the second biggest 50-day rally was back in 2009. You guys remember that, right? The Great Recession, we were coming out of it. That was pretty bad that time, right? So that time, it gained 34.2%. And at 6 months, it was up 22.2%. And at 12 months, it was at 22.8%. So we look at the graph and it says June 3rd, 2020, 37.7%. What's going to happen? You guys, I don't know what's going to happen. But here's what I do know. You have to keep investing. Now, full disclaimer, I put in a little extra money when the market went down because I knew that I was buying some stuff on sale. I was buying ETFs, I was buying some individual stocks that were on sale. But nobody can time the bottom of the market. I didn't try. I bought little positions over a couple of weeks and it kept going down. But I kept lowering the average cost of my share price, which means when it does come back, I'm going to make more money. Now, if we look at the year to date, you guys, you see that the high, as I said, was on February 19th, 2020. The S&P 500 we're talking about. That's the index I like to follow. 500 biggest companies in the country. Pretty good idea of what's going on. The Dow is only 30 companies. So February 19th, the Dow is at 3,386.15. Now, if we look at today, actually June 9th, it's at 3,205.17. You guys, we're only 160 points, 170 points away from the all-time high. Again, it's almost all come back. You see that we started the year at 32.57 and we're currently at 32.05. So we're really only 50 points behind where we started for the year. So we're almost back to whole again. But that means what? That means we're buying high again. You guys, all through history, people have said, I don't want to buy because it's too high. And the market goes up 70% of the time. It goes down 30% of the time. Now, if you only try to invest on those 30% days, the chances of getting it right once probably could happen. Chance of getting it right twice is unlikely, and the chance of doing it 3 times is pert near impossible. Nobody knows what's going to happen from one day to the next. I certainly don't. Nobody does. So what do? You keep investing. Keep making regimented amounts of money into your accounts, whether you have it taken out of your paycheck every week or you make a deposit from your bank to your Roth IRA once a month. However you do it, you guys, do it consistently and do it for long term. Remember, we are long-term investors. We buy investments, we hold them until we have to use them in retirement. I don't buy a company or a stock portfolio unless I plan to hold it for years. Now, that's not to say that in my taxable, if I take a loss, I don't do tax loss harvesting, but I sell that position and I buy something very similar to it so that I'm not out of the market. Buy and hold, you guys. That's all I can tell you. The only way to be consistent and become wealthy is over the long term. The stock market is not a get rich quick thing. Yeah, there's day traders that might make money, but they get taxed out the ass for it. Don't be that guy. All right, you guys, I hope you got something out of this. If you did, drop me a like. If you're not already subscribed, you guys, subscribe to the channel. We're over 700 now. We're growing daily, and I'm enjoying putting out the content. I'm enjoying reading all your comments. So please, if you have something, if you have an opinion on this, you guys put it in the comments for me. I want to hear from you. If you have ideas for other shows, put them in the comments. Sometimes you can ask a question, and it'll give me an idea to research it and do a show on it. So if you have those, put them in the comments. And again, thanks for everything. We'll see you.